So anyway, I'll put that on the website. That'll be in the spreadsheet section of the website. I'll try and add one a day, one a week to that, not one a day, one a week to that. But hopefully it's, it's a curated list where I see upside, but don't just automatically jump in. So anyway, so eEnergy, quick look at that. So never be scared to revisit stocks, because if you've done a bit of research, you know about them. And if they become a better proposition, which I think eEnergy has, the problem eEnergy had was their cash, their debt, all that. It's gone now. It literally, they've sold a part of the business for 29 million. Now they had so much debt and all that stuff that taking that off, they've still got 18 million in cash. They have 25 million market cap. By the way, on the website, I've actually put some more videos there on technical analysis here. I've updated it. And in fact, what's annoying is I did a bit on setting up a chart, technical analysis, setting alerts, downtrends, ranges, uptrends, watch lists, financials, forecasts on TradingView, and setting up a screener. They've just updated their screeners on there, so I have to do another one. And in fact, I've just got used to the new screener. And when I was doing that video, I think it was yesterday, the day before, it was the old screener. So I had to try and exit off. But now there's a new screener, which I'll go through and update that. But so this is important: downtrends, ranges, uptrends, because what you tend to see is a range happens at the end of an extended period of a move, whether it's a downtrend or uptrend. So if it's uptrending up and it's risen very quickly, you get people taking profit. Maybe the valuation now is above the potential, so people take profit. But people then who've missed the rise are buying in. So it's bulls and bears fighting. And hopefully, if they come out with more good news, then it'll go up again and break up. And same with the downtrend. You get a downtrend happening in the range, and what you hope to see is a break up. Now, in this case, it broke down. That's why you should never trade the lower end of the range. Wait until it breaks up. You want confirmation of it breaking up. No, higher highs and all that stuff. So I do that on the chart there, just showing, simplistic versions of higher highs, higher lows, or and you can see here, lower highs, lower lows. So yeah. So anyway, so what was I looking at? I forgot what it was there. Yeah, eEnergy. So as you know, on the spreadsheets now, and this will be on the website, but I've put the broker target in here. The broker target is 82%. Now, if you can get a safe, 40, 50, 60%, that's very good. Because you do 40% a year and you become start off with 10 grand, in 20 years' time, you'll have £6 million. You're 40% a year compounded. So don't specifically go for the massive upside that's high risk attached, because it may never get there. But if you can bring that risk down, but the reward's quite healthy, that's good. But they're saying 82%, and I sort of agree with them. And what I do here is my forecasters, on the front page, you'll see the broker forecasts, and then I put my forecast down here, and you can see across here, I'm saying it 12, 15 pence by 2025 if they achieve this growth that's in the broker targets. And I explain why. So they dispose of their management division for 29 million at 7.5 pence a share, plus contingent consideration, of which eEnergy estimates to be 8 to 10 million, depending on trading. So as long as this company trades well, they'll get between 8 and 10 million on top of that. Okay. eEnergy will now focus on energy services business, installation of EV and solar PV products with a significantly strengthened balance sheet. The release also highlights, this is taken from the broker note, by the way, that 2023 results, in part because of the balance sheet constraints, will be at the lower end. So that, to me, is a little bit of a risk. They're coming out with results, I think, the back end of this month. Okay? So to me, that's a bit of a catalyst. I would wait until results come out, because they have some nasties in there saying the growth isn't as good as we thought. Then it may drop a little bit. That, in my mind, is an opportunity, because it's going to go down. For example, look, following the close round, they have 18 million. That's 5.2 pence in share in cash. At 6.5 pence, which is what they are at the moment, they're only valued 25 million market cap. So they have 18 million in cash, and brokers forecast eEnergy generating EBITDA of 5 million for 2023. Now you put that on a 7 times multiple, that's 35 million plus 18 million cash, that's 53 million, or 13.6 pence a share. So that's more than double where we are now. Well, it's double, isn't it? So I think eEnergy is a good play, but be careful of the results. If they come out with really bad growth on the other side of the business that it's still holding on to, it may take a bit of a tanking, but that's an opportunity in my mind. If it rises, get in. I'm going to get in because it's going to go up. You know, it's literally confirmation that everything's fine. Unless it jumps by 100% or something, we shouldn't quite do that. But in my mind, this is the energy chart. Look at that. So even right here, if you put 20% in, it could break these. You can see this line here. Let me just get rid of the 50-day moving average. You can see there, you know, sort of a higher low maybe, you know, high, but we'll see. What you don't want to do is break down this range here, coming down. I think there's very good support at sort of 6 pence. If it goes to that, then you realise they literally have 5.2 pence of cash, and they got a profitable business. That's a bargain in my mind. So you've got value and growth there. So I quite like this play here.